So for sole proprietorship, basically, it's the same as a partnership. It's just that sole proprietorship is for one person. Partnership is for two or more persons, but there's a cap on the number of persons.
More of the term partner with the two owners, right?
Correct. Two owners, they become partners. Okay, and in Singapore and Malaysia, basically the regulations which govern this, like say, sole proprietorship is actually a Business Registration Act. Okay, so actually the law determines that the business that you run is supposed to be following a certain guidelines. Okay, importantly for sole proprietorship, the person who's the owner and the person who runs the business and the business itself or the entity name or something is all the same person. There's no difference lah. So Humaira, you can open one business, say you like to do maybe decorating of Hari Raya cards, for example. Maybe you do specialized Hari Raya cards. So if you call it Humaira's cards. But Humaira's cards is not an entity. It's just a trading name. Okay, so by you and Humaira's cards are the same. When I say the same, it means that there is no distinction between you and the business. Everything is the same. You can open an account under the business name with a bank, but that bank account is basically regulated by you. And if it's a partnership, it's the same thing. But you and whoever lah, your mom or your husband, so that person becomes a partner. So it's basically the same entity, no difference between you and the business. Now, if we go into private limited, this is where it gets a little bit different. First and foremost, the rules behind it, the law behind it, is governed by this thing called Companies Act. Okay, so in the context of Singapore and for Malaysia, there is a special Companies Act which regulates these kind of businesses. Okay, and what's special about it is that you, the owner, and the business are two separate things.
So it's not like the sole prop and partnership.
It's two separate things. So it's like giving birth to a baby. That baby has its own life, right? So private limited has its own life in a sense. So that private limited is able to actually do things on its own with your consent, with your direction. So that's the difference.
Meaning it's not directly bounded by whoever the owners of those private limiteds.
So the good thing is that, like if you want to buy a property, for example, you normally buy under our name, right? Normal.
Yeah.
But with a private limited, you can buy a property under the private limited's name, the company's name. So that becomes their asset. So
the asset is under the company's name instead of the owner's name.
So that's the distinction lah. Meaning the private limited company can also enter into contracts, to hire people, to engage in business, everything separated. So that separation is a form of protection also lah, between you and the company. So if anything goes wrong, there is a certain, a safety net between you and the company.
Understand. But does the sole prop bounded by the Companies Act as well, actually?
No, different. It's under the Business Registration Act.
Business Registration Act. Okay.
So if you were to ask me between these two acts, the private limited, the Companies Act, right, which regulates private limited companies, that one is very detailed, very super detailed. So everything the company can do, cannot do, how it's be done, everything is regulated. Between these two, if you were to be entering into a business that is high risk, or or you want to do something together with someone else, and you want to have this kind of comfort and knowing that everything will be okay in the sense to follow the law, you're protected, then private limited is the way to go lah, of course.
I see.
Yeah, because the rules are very, very tight. This one is something I cover in some of the courses that I do. It's an acronym lah. It's actually RROR. Okay, there are 4 reasons.
That's hard for me to pronounce.
Actually, RROR is basically risk, revenue, ownership, and rewards. Risk, revenue, ownership, and rewards. So these are the 4 categories of reasons why you might want to go to private limited from day one. So I'll give you the first one. Risk is because the business that you want to run, the risk is very high. Example, of such a business is maybe you want to do a maid agency. For example, the inherent risk in the business is high. Because if anything happens to the maid, there's liability there. It's a human life, that kind of stuff. It could be, maybe you could be doing a business of rope access. Rope access means, your employees actually tie themselves with the ropes, and they go down, they abseil from buildings to clean buildings, or to clean ships. These are rope access. So it's very high risk. So this kind of business, because the risk is high, go straight for private limited. Okay, then you can apply for get all the insurances that you need.
Yeah.
You're covered. You can sleep better at night lah. As a business owner, don't have to worry so much that what if something goes wrong. Of course, things can go wrong, but you try to mitigate. That's the risk part. Number 2 is revenue. If you want to do a business, of course we will do planning, right? So when we do a planning, then we see, based on all these numbers, I think first year, within 9 months or within 10 months, we will hit 1 million in revenue in Singapore. Okay, because it's going to hit 1 million, it's reasonable that we're going to hit 1 million, then it's better to go straight to private limited. Because in Singapore, as a sole proprietorship and looking at the income tax rules, right, under 500,000, then your accounts, if it's not perfect, it's okay.
Yeah.
Okay, if it's below 500,000. If you ask me, 500,000 is high. Okay, I would say if it's below 300,000, then it's fine. But 300,000 onwards, you should make sure all your accounts are done perfect. But 1 million means GST already. So if you're not going to hit 500,000, go straight for private limited. Don't even wait for 1 million. Because by then it will become a nightmare. Then you want to reverse back, it's going to be troublesome. That's R and R. Now we're going to O. O is actually ownership. So you want to do a business, you have idea, then you cannot do it alone. Because it's tough, or you don't have enough capital. You need to call a few friends together or something. You come, everybody, put some money in. I want to do this business. So you need funders, but I want to go straight for private limited. Then all of their ownerships are structured properly into the business. Everything is transparent. It's clear.
The ownership refers to the shareholders, is it?
Shareholders, correct. Yes. Okay, and the last one is actually rewards. Rewards means, just now we talk about revenue. The revenue is the top figure, is high. This one is the bottom figure, the net profit figure. If you, based on your numbers, you calculate, you check everything, you notice that it's going to be very, very high net profit, then it's good to actually be a private limited from the first day. Because, as I mentioned to you earlier, as a private limited, you have a better tax position as a private limited than as a sole proprietorship.
After they own, not they lah, as a existing private limited owners themselves, is there a downsize to them owning a private limited? Like any disadvantages? Yeah.
Sure. Actually, the biggest disadvantage in that sense is a private limited, because it needs to follow the law, right? And the Companies Act is quite tight lah. I wouldn't say quite, it's actually very tight lah. Okay, it protects the business owners, but because it's tight, the cost of complying to it is higher lah. So you can expect, like, everything you want to do, there's some cost to it. So for every private limited, for example, there are 4 main things that you have to do. You have to prepare your accounts. Either it's done monthly or quarterly or annually, it's up to you, but accounts must be done. Then these accounts must be prepared in accordance with the FRS, meaning it has to be tabled as a financial statements.
I see.
To the shareholders. So that's another compliance matter. This is usually done by a chartered accountant. Then you should have the AGM done. Call for a meeting for all the shareholders. These are the books of the company. These are the financial statements. Then make sure everybody agrees. Can be open to inspection. And last but not least, the tax has to be submitted. This is the 4, at least. Very close, 5th one is things like GST. So you hit 1 million in revenue, that's GST as well. So all this is costly. So if you were to ask me first, how about as a sole proprietorship, there's no such cost. Actually, there is, right? But it may be lesser a bit. So instead of 4 things, it's maybe 2 things that you need to do instead of 4. So it's cheaper.
It's more of the private limited owners. I think the transparency works higher in a private limited. Because everything needs to be reported, everything needs to be taken account on, everything needs to be there being shown to the shareholders and to the directors, right? So yeah, it's not really a downside, to be honest. It's more of additional requirements that private limited owners need to be aware of and do it.
This transparency is important because it protects the owners. So remember just now we spoke about one point, as a private limited, you can actually easily attract investors, right? Because you can sell shares. So imagine you put money into the private limited as a shareholder, you would want to be able to see how things do that. So that legal requirement for all this transparency, the accounts has to be done, it makes sense. Then you know your investment is protected.
Yeah.
Makes sense to you, right?
Yeah, makes sense. Understand.
I think there's a few more downsides. Things like as a sole proprietorship, you don't have much access to profit. Okay, because everything is your profit. So from the business that you run, whatever income from the company, from the business is already your income. Okay, but as a private limited, you need to make sure that everything is reported under the company, the profit, and the company pays the tax first.
Yeah.
Okay, then the balance, you have to decide how much of profit I want to take, how much of profit I want to keep inside the company. So that sometimes people think is a downside of having a private limited. You cannot take everything.
Yeah.
But again, there is a reason why it is
Clarity
to
of
protect the company. You want the company to be able to continue, right? Be sustainable.
continuity.
Yes, correct. So these are the main points.
I see. Yeah, it makes private limited businesses more sustainable because owners cannot really take everything.
Yes.
Because they have
cannot
to
do whatever they want.
Yeah. Because it's tied to the company as well and to whoever the shareholders are lah. Because they inject the funds inside the company, right?
True.
Understand.